On today's show, we're going to drill down into some oil and see just how profitable an investment it can be. My name is Candace, and we will begin right now. I love pop culture, and there is a ditty in pop culture that is all about oil. It goes like this. Let me tell you a story about a man named Jed. Poor mountaineer barely kept his family fed. Then one day he was shooting at some food, and up from the ground came a bubbling crude. Oil, that is. Black gold. Texas tea. I am sure you have heard the tune before, and in a way it is very appropriate for the topic of this video. The energy sector is exploding in value, and our good friend oil is leading the charge. Investors are overjoyed with their energy holdings, while some of the other sectors are bordering on disappointment. What is going on with the price of oil? Is this all because of the current war between Russia and Ukraine? Weren't we supposed to be moving away from oil and into more renewables? The answer to many of these questions began well before the invasion of Ukraine. In fact, if we go back to the beginning of the illness, we can see some very interesting price actions in regards to oil. In simple terms, it tanked. Why did this happen? The simple answer was demand for oil plummeted with people in lockdowns not driving. At the same time, Russia and Saudi Arabia were having a wee bit of a supply war, and thus they were flooding the markets with oil. The end result of this trade war was excess oil. Yes, we had too much oil. We were actually running out of places to store it. In fact, the West Texas Intermediate crude oil price, or WTI for short, was negative for a short while in the early part of the illness. Not just by a wee bit. It was listed as negative $36.63 a barrel. Holy banana bread. Once we began to progress through the illness and reopening began, the WTI recovered and the demand for oil began to climb sharply. At the end of 2020, oil was back up to $48.52 per barrel. And then by the end of 2021, oil had surged to $75.21 per barrel. In 2021, we saw a 55% increase in the price of oil. The energy sector was beginning to boom. One of my favorite oil ETFs, XEG, grew by 75% in 2021. That is amazing. In fact, after 2 months of 2022, it is already up by an additional 42%. Wow! As we move into 2022, interesting things were happening in regards to oil, and the biggest was an energy crisis in Asia. China was at the point of rolling blackouts to try and preserve energy. This was beyond bad and had impacts on the supply chain as factories were all of a sudden in the dark. For oil, this only increased demand and painted a very good outlook for 2022 for the entire energy sector. In this case, things look rosy for all forms of energy. Seeing that to be the case, I diversified more into the energy sector. However, that was only the beginning as the drums of war began to beat in Russia. The Russian invasion of Ukraine was about to take oil's boom and put it into overdrive. Between inflation and increased demand, oil was already approaching $100 a barrel. Then, as the invasion began, prices exploded based on many factors, though initially it was powered by the uncertainty of war. The uncertainty revolved around the fact that Russia produces 10% of the world's oil supply, and what was to become of that oil? Initially, there were no sanctions placed on Russian oil, though many countries were choosing other options whenever they were available. That is, of course, changing, as American politicians have enacted a ban on the purchase of Russian oil. It is not as easy in Europe, though. They receive 40% of their oil supply from Russia. With Russian oil holding that level of significance, it's very hard to find a replacement. All of these oil profits are helping to fund Russia's war on Ukraine. Sanctions would be nice, but at the same time, they will only drive oil prices higher. It is a bit of a conundrum to say the least. So far, there is no end in sight to the price climbs, but surely the price of oil cannot keep going up forever. As investors, there is still a lot of money to be made with the energy sector. If you got in at the beginning of the year, you are already seeing a lot of profit. However, this will not continue forever, and you do need to pay attention to the news and the war. If the war were to end, oil will come back down, though keep in mind it will only come back down to a boom, so overall it will still be a good investment. The other sectors will eventually recover, and a smart play may be to look at taking some energy profits to buy the dip in some of the red sectors. It is very hard to time the market, so I would even consider a dollar cost average method of extracting a wee bit of profits as we go along. If this war drags on and oil keeps going up, another factor is that renewables will indeed become something people will look at more and more as oil's price begins to get out of reach. When investing in energy companies, it is not a bad idea to ensure you are selecting companies that have a good footing in renewable energy as well. Enbridge, for example, has a strong record of adding renewable energy sources to their company. There are a good number of oil-based penny stocks that have also been doing very well with this hyperboom. You can make money with them, but be super cautious, as when the hyperboom drops back down to a regular boom, those will be the stocks that fall the most. So if you are looking to DCA your profits, those penny stocks should be the first to go. Now, I have mentioned a couple of stocks in this video, namely XEG and Enbridge. I just want to be clear that I am not a financial advisor, so be sure to do your due diligence on these stocks. I am merely the beginning of your research, and a financial advisor is the end. If you guys loved this video, be excited. There's way more to come. Until then, why not watch one of these videos? And before you jump into that content, just be sure to like and subscribe to support the channel. I'll see you in the next video.